Rajneesh Kumar, CEO of Fullerton Securities and Wealth Advisors, joining us from Delhi. Rajneesh, what is it that you're advising clients to do in this market fall?
Hi, good afternoon. Well, this looks like a difficult market, and especially with the IIP numbers, the way it has come out, mood definitely looks pessimistic in the short run. However, if we are taking a fairly contra view on the market. If you look at the factors which are driving the market down, it's been quite obvious to everyone that a lot of it is driven by the fact that there is not adequate capital flow coming into the country, leading to currency weakening. And of course, it's also a global phenomenon. I mean, stocks have been going down globally since March, April, and India has been no exception. But we believe that this trend will reverse at some point in time, simply because commodities are softening and are likely to soften further, considering that Europe will see lower growth, and China data seems to be suggesting that growth will be much lower, and the pressure on commodities will go down, and that will be good for a country like India, which is a net importer. So a few quarters down the line, things will get better for India, and hence it's important for customers, for investors, to stay focused and stay invested.
Sure. So Rajneesh, if you said, like you just said, that you are taking a contra view, which sectors would you advise your investors to be putting their money into?
Right. So we are actually we are looking for opportunities in sectors like financial, into commodities. Not commodities, I mean commodity-linked sectors like, let's say, something like a Sterlite or a Jindal Steel. So these kind of companies is what we are looking at right now, and not looking at defensives necessarily, the way many are looking at.
Right. What about the broader markets at this point in time? I mean, some badgered down sectors in infrastructure, construction. Cap goods, of course, has been hammered out of shape. But, there would be contrarians who would believe that there could still be value bought into in these sectors.
Anything which has got policy making at the core, like infrastructure, is something that we are very careful about right now. So we are not really advising people to get into that, because there are a lot of uncertainties around that. And honestly, I don't think that there's probably very significant policy reforms which are going to hit us in the short run. So I would be quite cagey about that. So anything like infrastructure which is linked to policy, we are sort of staying away from.
From the defensives then, what is it that you're most bullish on, which gives a good value and growth performance for you? Because most of these FMCG stocks, while there may be growth in the sector, are trading at expensive valuations. So where do you find a good value and growth balance within FMCG and pharma?
Okay. See, in FMCG, as you rightly pointed out, that valuations are looking quite high. So honestly, I don't see much upside in FMCG much. But if you look at pharma, there could be potential upside in mid-cap pharma companies, companies like, let's say, Dishman Pharma. So we are actually getting a little deeper into these sectors to see if there are opportunities. And especially in the mid-caps, there could be potential opportunities within pharma.
Okay, and also give us a sense on how you're going to be looking at some of the cement stocks, ACC and Ambuja. While there hasn't been much pickup in dispatches, there are expansion plans which are likely to come on the annual. Anything that you would like from this segment?
The cement, I don't have much of a view on right now, so I would not comment on that.
Tata Motors, it's up about 0.7% and 291. Would you look at buying the stock?
Yeah, Tata Motors should be a good buy at this point in time. Also because it's in many ways linked to the larger economy, and we feel that economic activity for us should pick up in the next few quarters.